All right, so thank you so much for joining everybody today. We're going to be talking about the tokenization and the future of finance. Today with us, we have Jean-Marc from Realty, Fedor from Lenz and Starin, John from IAM InnoLab, and Arnaud from Mont Pelerin. So we'll go over tokenization and the future of finance. They have a lot to say about this. I think the audience have a lot to ask as well. So before we get into the panel discussion, we will look a little bit into what is the Crypto Valley Association. So we can give you a little bit about ourselves, a little bit of an idea of who we are and why you should become part of this community and follow us through our journey of digitalization as well. So let me share my screen with you now. All right. So a little bit about us. Our vision, firstly, is to enable blockchain and other cryptographic technologies. We're here as an infrastructure and ecosystem to be able to provide support to everybody around it and be able to really grow your project, to create partnerships and to create an environment which is friendly and allows you to grow. Our mission is to become recognized as the global leading ecosystem for blockchain and cryptographic technologies through our members. And here you can see some of our core values, of which is transparency and professionalism. So a little bit of the timeline. So some of you know, the Crypto Valley was actually founded in 2013. So not the Crypto Valley Association itself, the Crypto Valley, with actually the inception of Ethereum by some of its founding partners as well. And so then, due to the need of an association to support this ecosystem, the Crypto Valley Association was born in January 2017. So 3 years ago now. It's quite, we've come quite some far from that. So that we also had a roundtable where we discussed with FINMA on token classifications. I mean, fun fact for you, Switzerland was one of the first countries to bring out a standard for classification of tokens, being an asset tokens, payment tokens, and utility tokens. Then in 2019, we had one of the first conferences within the Crypto Valley, 1,200 attendees. Some of you might have been there. It was a great event. And then we launched the virtual series, which I'll be telling you more about later. It's an interesting one, a little bit for our audience here that aren't from Switzerland, to see a little bit about our ecosystem. Here are some of the latest figures that came out from the CVC report just recently. Actually, I definitely recommend you going to check that out. There's definitely some great details within that. And here you can see the Crypto Valley, which is based in Zug, has 439 projects that are working with blockchain-based technologies. And you can see some of the others, other cantons and regions, and how things are dispersed a little bit around. But you can see that the Crypto Valley has the most. So a little bit of our members. Our ecosystem is around 7,100 members, around 900 of them being active, and 150 corporate members, as you can see here from this list, many that you probably are familiar with. So working groups and chapters. I think this is what drives our ecosystem. This is one of the most important things probably for our viewers that might be interested to learn more about the regulation, tax, investing, cybersecurity. They might even want to learn more about blockchain technology. And we offer via our working groups the ability to converse with thought leaders and to be able to, if you're building a project, to converse with potential partners and grow from this, and even the potential to organize your own events based on a project or a topic that you're interested in. And we have a new entry coming this season, which is the startup. So every startup wants to speak and understand from others and network and communicate. So through this growing demand, we decided to create a working group based on startups to help and support them. Can't forget our chapters, which help the different regions within Switzerland. As you all know, Switzerland is quite diverse with its many languages, so our chapters help communicate with our local members locally, essentially. So the Western chapter based in the French speaking part, and Southern in Italy. And so the CVA events, here you can see a little bit about the Crypto Valley conference that we hosted, some lovely photos. Unfortunately, we couldn't do it this year. We had some great events in the past in collaboration with some universities. And then due to the COVID-19 pandemic, we had to go fully digital. So one of the great attractions here is actually the online portal that we have. It's like a mini LinkedIn for cryptocurrencies. You can see all the people that are around in our network. If you're within, for example, London for a day and you'd like to network and get a coffee with somebody that is crypto blockchain related, you can find them on the map and directly message them. We have some great features within that, live feed, events, news, job portal, etc. So I definitely recommend checking that out. And then, of course, we launched our virtual series, some great events on stable coins, enterprise blockchain, the Bitcoin halving, which was great, with a little after party after. And then we're moving on to the next series of virtual events, which is going to be a blast. So stay tuned for the next ones that are to come. If you want to join us, it's very simple. Individual memberships are 100 Swiss francs per year, and then corporates vary from 500 Swiss francs to a little bit more, depending on the size of your company, to benefit from all the advantages said above. So that being said, I'm here and available to support if anybody needs anything, any questions after the webinar about the Crypto Valley Association or anything related to what was discussed. Feel free to reach out to me personally, and I'll be happy to support you with any needs that you may have. So without any further ado, we can get started. So if I give you a little bit of the agenda for today, we will go over an introduction of each one of our panelists and their companies, so you can get to know them a little bit. And then we will go on to a Q&A, whereby I will be asking some prominent questions about the tokenization space for our experts here. And at the end, we will have 15-20 minutes for you all to ask questions. So feel free to do so at your leisure as well. So first person I invite to speak today is Jean-Marc. Please, if you would like to unmute yourself.
Good afternoon. Yes, I'm Jean-Marc Jacobson, co-founder of Realty Inc., Real Token Inc., along with my brother, Remy. We founded Realty in February 2019, and its purpose is the tokenization of real estate, mostly American real estate. It's an American company. So we come initially from the real estate space. That's what we've been working in for many decades. Early in 2012, we discovered blockchain, Bitcoin at the time. That's mainly what they existed. We became miners. We created the first Bitcoin embassy. And we waited until the legals allowed us to join both passions together. And Realty was born from those two passions, real estate and blockchain. Today, we tokenize US real estate only. We are trying to move to other jurisdictions. And as we'll discuss, legals are always a very important part of the asset tokenization space. So we look forward to having those discussions.
Awesome, thank you so much, Jean-Marc. Fedor, would you like to take the stage?
Sure. Thank you very much, Shiraz, and thank you, Jean-Marc, for the introduction about the importance of legal. So we are the ones who block the creativity. By way of introduction, so I'm a partner at Lenzenstellen. We are a law firm, Swiss law firm based in Geneva, Lausanne, and Zurich. We are one of the largest Swiss law firms. We're a full-service firm, so we cover all areas of law, including real estate and fintech. In my role, as a partner within the firm, I'm one of the partners in the banking and financial practice, and also heading the fintech desk. You know, if you want more information on the firm, you can go to our website, etc. I will not bore you with that. What is potentially more relevant to our today's discussion is I'm also the acting Secretary General of the Capital Markets and Technology Association, which is a Swiss association which we co-founded as a firm together with the Swiss Quote and Temenos with the support of the EPFL. The purpose of the CMTA is we're not a competitor to the CVA. We're sort of a parallel association which aims more at trying to build and work out standards on an institutional level, and then promote those standards to improve the acceptance of the technology within the industry. The vision originally was the vision originally was to make sure that in capital markets transaction, the benefits of blockchain technology and other technologies by the same token can be reaped without legal problems or obstacles. And this is why in April 18, looking at how some legal scholars and publications were advocating that it was not possible to, let's say, tokenize shares under Swiss law because of certain legal obstacles, our thinking was a little bit different. Rather than saying that it's not possible, we tried to craft a way which actually under the current law makes it possible, and also bring the legal basis and legal reasoning underpinning that. And so that's how it all started essentially. And on that basis, we managed to issue a blueprint for tokenization of securities, which is public. You can go on the CMTA website and look at the blueprint. I think that will be helpful. And essentially, once you have a blueprint for one type of asset, you can build on that to tokenize other assets. And why not real estate? But obviously, and as we'll discuss later, legal and regulatory, but also tax play a role in limiting the ability of what you can do despite the technological advances.
Okay, yeah, very interesting. Thank you so much, Pedro, for that. And yeah, I'm looking forward to discussing that in further detail. John, please tell us a little bit more about yourself.
Hi, everybody. My name is John Orthwine, and I started my career as a software engineer working on distributed high availability systems. And then I fell into the investment management world. I worked at Man Investments and LGT Capital Partners in liquid alternatives. And around that time, Bitcoin was starting out, and I attended a number of the Bitcoin meetups here in Zurich. That was really the place to get some really firsthand information to figure out what is this new animal. It was extremely interesting, and it really hit the nexus of my interests of finance and software engineering. So that was a super interesting ride for a number of years. And then I got the opportunity to join Melonport, which was a project to create blockchain-based infrastructure for fund management. And at Melonport, I was working on the risk modules mostly. And after that project, which is now live, after that project, I then joined the IAM Innovation Lab here in Zurich. And the idea behind the lab is to really be innovation and inspiration for asset managers and investment managers. We don't only work with asset managers, but that's kind of where our expertise is and where our historical backgrounds are. We do ideation and prototyping and implementation of software projects and systems. And we kind of try to focus on new kinds, innovation in user experience and new business models and blockchain and tokenization type of efforts. So that's kind of where our focus is. We do this through any kind of combination of design thinking or classical project delivery. Yeah, I think that sums up very well right now.
Great. Okay, perfect. Thank you so much, John, for that. Arnaud, last but not least, please.
Hi, Shaz. Thank you. I'm Arnaud Salomon. I'm the CEO and founder of Montpellier. Originally, my background is engineering and communication systems. I studied at EPFL in Lausanne, but I did all my career in finance, mostly as a commodity and FX trader. I fell in love with Bitcoin back in 2012. For me, that was a real discovery. That was a real slap in my face when I discovered it. It was answering pretty much all the questions I had about what is money. And since then, it became an obsession. Obviously, as Jean-Marc stated, the underlying technology, the blockchain, is very interesting for the opportunities it offers for the financial world, simply because at the end of the day, pretty much all financial assets are contracts, and it can be somehow modeled in a way or another in the form of smart contracts. So you can automate a lot of its life cycle, and we believe this is a very interesting topic to work on. That's how Montpellier was built. Actually, back in 2018, we did incorporate the share of Montpellier's company into tokens together with Fedor and then Senstein. It was quite new at the time because it was already pretty much hype, all the security tokens and STOs, etc. But at that time, they were mostly set up in the form of a private contractual agreement between the company, the issuer, and the token holder. Yeah, and therefore they were trying to mimic the shares and providing by contract some kind of rights for the token holders, such as consultative voting rights, rights on future dividends. So it was somehow mimicking the shares, but legally speaking, it was not. At that time, it was quite new to be able to really incorporate the share of a company into tokens and to distribute directly to the crowd. So we did obviously a crowdfunding this way. And now we're working on building a new kind of financial institution. We're based in Geneva, and we are very much focused on tokenization frameworks, how to bring compliance layers onto that, how to make sure that we can enforce the same level of compliance that we have today within centralized ecosystem onto the tokenized world. Yeah? And we believe this is crucial because through the usage of rule engine, you can really automate and have straight-through processing as much as possible. Obviously, there are always some issues that has to be dealt by human. And that's why we came up with this comprehensive framework that includes compliance oracles, meaning that some people can actually do this off-chain, on-chain bridging world. Yeah? And I believe this is what we're going to speak today.
Yes, exactly. Thank you so much for that. And we'll hear a little bit more from Arnaud later on. But you spoke a little bit about the tokenization of your equity, and we hear a lot about the tokenization of real estate as being one of the key use cases here. So Jean-Marc, maybe you can tell us a little bit more about why we're hearing so much about real estate tokenization and why Realty decided to get into the tokenization of real estate and not maybe art or something else, for example. You're on mute.
Of course, I'd love to. So when we looked at, as I said, we come from real estate, and we were trying to look at a solution to tokenize real estate for a long time. And even today, you cannot have a property directly tokenized. It's impossible. There's no land registry that will allow you to write tokens. And even if some land registries are on the blockchain now, there are a few of them, they don't allow for tokenizations. So when we discovered that it was possible, as Arnaud said just a few seconds ago, to be able to tokenize a company, to express the shareholding through tokens directly in the incorporation documents of that company, then we understood that we had a way to tokenize ownership of real estate. That meant that we have one company in the US, we took one LLC that purchased one asset exclusively. So one LLC, one asset. We tokenized the LLC at its incorporation, and then we could distribute the tokens. Now, it has a lot of advantages because the token is independent and exists on the blockchain, actually on Ethereum. It's there. So not only is there the intrinsic value of the real estate behind it, But there's also the fact that it's a token that's usable in DeFi. You can use it on Aave later on. You can use it to get the rent in USDC that you can put on Compound, etc. So we really can leverage the power of the upcoming industry. There are some drawbacks to tokenizations today. That is, today, we have to do it through an LLC. So when we receive rent and when we redistribute it to the owners, token owners, it's considered, as it is clearly a security token, it will be considered as a dividend payment. Therefore, taxes come in, and it creates a lot of complexities from the securities point of view, SEC, etc., from the real estate point of view, and accounting. So in Switzerland, we looked very quickly at the possibilities of tokenizing real estate. A main challenge came from the accounting side, the possibility to give dividends, well, the rent through dividends regularly before the year end was over. A good example of where the law doesn't really follow the technology. At Realty, we can distribute, before the gas went totally nuts, we distributed the rent on a daily basis. Every day, you received a fraction of the rent that you could see. Can't do that through dividends and shares. You need first to close the accounting up for the period and then be able to issue the payments. So all these are very interesting areas. There remains a lot to be done in tokenization of real estate. But right now we are at the forefront, and I believe that Realty is the only one really today that allows to have an independent token that lives actually on the Ethereum blockchain. And I think that's very important.
Mm-hmm. Okay, it's an interesting one, and you spoke a little bit about the challenges. So maybe Fedor, you can tell us a little bit more about that as you're representing one of Switzerland's leading law firms. What challenges do you see when it comes to tokenization of assets in Switzerland and globally speaking?
Thank you, Shiraz, and Jean-Marc. Thanks for the description of what you are doing with real estate, etc. I think, in a sense, the challenges start with semantics. When we talk about tokenizing real estate, as Jean-Marc rightly said, it's not. It's a misnomer. It's the actual holding vehicle that is tokenized today. So the shares in a holding vehicle are tokenized, and in a sense, it's just like what was the fad 10, 15 years ago in terms of securitization. The securitization wave covered real estate, covered bonds, portfolios of assets, receivables, credit card debt, cars, etc. A lot of stuff. And the situation was more or less the same. So you have an asset transferred from an originator to the securitization vehicle. The securitization vehicle dumps securities on the market to transfer the risk on the market related to that asset, and then the originator received the purchase price. It's a similar strategy here. Technically, this strategy can cover anything. You could put art in that thing and then say we've tokenized art. It will just need to be kept in a vault by that securitization vehicle. That's sort of the practical first aspect on structuring. But then, unfortunately, you still have regulation. And when you talk about tokenization, the idea behind is to push the value of the assets to a large number of people. So the boundary there between this and a collective investment is very thin. And a lot of regulators, Switzerland, who is one of the first, is very, very protective of the investors and say, if it's a collective investment scheme, the threshold of regulation is here. And no way you can meet that with a low-cost technological solution. So that's one threshold. You can overcome that in certain circumstances, including with real estate. Then you will have legal challenges, just the pure legal challenge, because you're doing it first and you have to distribute that to the investors and make sure that legally it works and the assets will be transferred. That's solved more or less, at least in Switzerland. It will be totally secure with the new law, which has been now voted by both chambers of parliament. There is a final vote and then referendum period, and then we'll have a sort of fully secure transferability of those tokenized shares and instruments. So once that's sorted out, you still have other obstacles. For real estate, you have, for residential real estate, the restrictions on ownership. Foreigners, cannot invest, etc. Well, you can do it with commercial real estate potentially, but that's a restriction. You have tax. If you do a Swiss tokenization vehicle for real estate and you pay dividends, as Jean-Marc described, you want to pay them first, as soon as, as often as possible. That's difficult. There might be solutions to circumvent that, but it's difficult. Accounting will be a nightmare, and taxes. Dividends from a Swiss company, attract a 35% withholding tax. So that's it. You practically can kill the project because of the tax friction. At the same time, for the same piece of real estate or asset, a Luxembourg securitization vehicle, again, you're using the old for the new, they can tokenize whatever they issue, and that can sort of works. Whatever you could securitize at the time, you can tokenize today by just tokenizing those securities. And then ultimately, not only from a legal regulatory perspective, but more practical as well, it's all well and good to have tokenized something, but the missing bit until today has been the secondary market. It has always been the problem with for securities market and private equity deals and other liquid investments. You're stuck with the investment until a liquidity event or the investment goes bust. Now, the tokenization allows to solve the first problem and creates a potential for liquidity. But you still need to have a marketplace, an infrastructure where you can go and meet, buyers, meet sellers, and transact. Okay. So there's a problem in terms of approach. Today's world is built around centralized systems. So you have a centralized stock exchange, and you have brokers, dealers, and everything pools, and then they have the meeting, etc. But that adds intermediaries and cost. Mm-hmm. With blockchain, the advantage is you can have the partially or totally decentralized marketplaces. However, before you do that, the regulators have to go through that, wrap their head around market manipulation, market conduct, how to localize that, and what regulatory regime to apply to protect the investors. Mm-hmm. So that's still a sort of hurdle. I think in Switzerland, with the new law, we'll reach a point where lightweight structures, DLT-based secondary marketplaces will be able to be licensed pretty easily at low cost and low capital adequacy requirements. So that will be a good breakthrough, because once you have the secondary market and you know that the cost of getting there to getting to the liquidity and to your investors is sort of lower than doing obviously an IPO or a private placement, that sort of will channel deals to that structure and to tokenizing things. So today it's sort of difficult that there are certain OTFs that are about to be launched, but it's still sort of next day, etc. I think by the end of the year, it will be sorted, and therefore we will have a full infrastructure chain to sort of do, any capital market transaction. Globally, it's a difficult one. I obviously cannot comment on other laws, but each jurisdiction looks at that from two angles. One is, I want to be competitive and attract business. The other, I don't want to let shady stuff come in and have all that the transaction that would attract bad press. So they are sort of between the hammer and a hard place, and they want to do the balancing act. So you have the ACC saying, oh yes, we want to do this, but on the other hand, they will not issue no action letters or not authorize a crypto fund or not authorize this or that, or etc. Same with other regulators. Like the EU is pushing, and maybe you've seen there is a leaked document on DLT framework for the EU to create a sort of digital asset market. Good read, by the way, but it's still getting there and adding layers of regulation. Absolutely, more. Absolutely. Okay. But I would advise anyone to think about not going into the direction of saying regulation doesn't apply to that. It does.
I'm laughing. I'm sorry. I have to jump in because basically, even though I'm in real estate and I'm from Bitcoin in the beginning, the first thing I spoke about in my introduction was the legals. You described exactly le parcours du combattant, the nightmare that we have to go through at the beginning of realty, to go all through the hoops, the legals, the lawyers, the approbation, the exemptions. You have to do it with that. Like, can you put the exemption in a smart contract? Of course we can. And then the auditor comes and looks and said, so how did you deal with that? We show them the smart contract. And you can see their eyes like in cartoons, going in spirals. They get rid of that. Nobody's going to understand that. Yeah. So we have to go back to the old way. I mean, it's exactly how you described it.
So maybe we can take the perspective of somebody that's done it now. John, I know you from IM Lab. You've chosen to tokenize your equity. Maybe you can tell us why you decided to do this and some of the benefits and challenges you faced in a practical sense.
Yeah, sure, Raz. Well, as our name suggests, we're all about innovation. We're really dedicated and committed to helping big institutions try and innovate, try and do new things, because what we kind of see is that their hands are tied in many things in this innovation arena. They have to get approval from different departments. They have to get budgetary requirements approved, and they're very slow moving. We kind of say they're these large tankers. And our whole thesis is we wanted to be this speedboat that could move and execute projects very quickly for these large institutions to do things like prototypes and to show what can be achieved, what kinds of new business models can we look at by doing this very quick, innovative prototyping type projects. And we really believed that tokenization was an extremely, really a groundbreaking social technology, really. And we could talk about tokenization all day long, but it just has a different weight if you do it yourself. So we decided to take the equity of our company and to go through that process and to have a very careful process, how we did it, how we chose the technology, and how we went about it. And so we started out really by looking to see if it's possible legally. And for that, the CMTA was very, very interesting to read their blueprint and to take a lot from that. And then we did many rounds with different technology providers and different standards, even considering doing our own standard. But in the end, what we really wanted was an extremely open technology, one that let us be in control, and one that was freely transferable and didn't require kind of a platform around it for doing things like asking permission to exchange or to transfer an asset from A to B. And so we ended up talking to Montpellier, and they had the bridge protocol, which is an ERC-20 compliant standard, but it has a lot more than that. It's completely open, and it left us in control of the token completely. And it was all open source. It was all very well executed. And it had some really interesting things like this ability to upgrade, because we often talk about this word immutable with smart contracts, but forever is a long time, and things change and laws change. So this idea of being able to upgrade a smart contract was very interesting. And Montpellier, they used Open Zeppelin's upgradable proxy, which was extremely interesting technology to learn about and to look into. And they also have this rules engine. So at the moment, we did use this technology to do the tokenization. We've issued and deployed this token. It's on the Ethereum network right now. And the interesting thing about it, and it's wide open at the moment, so anybody can buy this and transfer it to anybody else. But we have the ability, should the laws require it, to be able to put rules on top with their rules engine. So we found that all very attractive, and that's why we chose to go with them. So it was really about the openness and the flexibility on the technical side. And having them also worked with Lenz and Stahlen on the CMTA blueprint, that offered a very convenient package for us to do that. And again, so the whole reason we did that was not to raise funds for a company, but so that we could go through that whole experience from the legal side to the technical side to the deployment of the token and the eventual management. So that whole life cycle really of issuing a token and tying it to this legal idea of a company's equity here, at least for a Swiss company.
Yes.
So we were able to do that, and that went very well. And the whole reason we wanted to do that is so that we could speak from experience, so that we could really, walk the talk. Everybody's talking about tokenization. We actually did it. We now know how to do it, and there's a lot of experience that we gathered along the way. And now going forward with that, we're looking and how can we use that now? Because it's really great to have this idea of, wow, I have a tokenized share, now what, right? Because really tokenization, the big benefit is for something that needs to be extremely liquid, right? If you buy something and hold it for 10 years, what does the tokenization really get you? So the point is, with this tokenization of real world things like company shares, the interesting thing going forward will be, what can we do with that now? So we can think about, using this as collateral, or lending it, or using new structures to govern it, like multi-sigs. Using these governance tools, we can look at trading it on decentralized exchanges, AMMs like Uniswap. So these are all really interesting areas that we want to explore, because that's our business. Our business is to help companies innovate and to kind of breed these new ideas with tokens.
Oh, great to hear, and I'm glad that we always have this bad perception, right, that crypto companies, all they do is talk the talk. But I'm glad that you've been able to walk the walk as well, and now we get the opportunity to hear from the man himself, Arnaud, CEO of Montpellerin. Maybe you can tell us a little bit more about what building block tokenization solves in the way you're trying to reinvent financial institutions.
Yeah, thank you. Thank you very much, John, as also. I think I would like also to start with the first, I think it was clear from what everybody said, but I believe it's important to emphasize on it, is that a token is not a new asset class. A token is just as good as the underlying that you incorporate into. And in this sense, it's very different from the crypto world, like Bitcoin and Ether, because those are true new asset class. Those are true new assets. There is no well-identified issuer. It's an open network. Everybody can join. But when you actually issue token, actually the token is just a technological vehicle. And the issuer is actually extremely well identified, and he has to respect the existing rules. And the rules actually applies to the underlying, not the token itself. But the good thing is that this technological vehicle can be programmed to behave exactly how it's supposed to. And that's what we believe this is the future. I mean, we've been talking a lot about equity tokenization and shares in particular. And we truly believe here that in the future, companies will directly incorporate on the blockchain and manage their capital on chain. Today, it's different. Obviously, today you create a traditional company, then you have a board resolution to incorporate it into tokens. You have to add some articles into the bylaws of the company, and that's pretty much it. But again, this is a two-step process. You first incorporate traditionally the company, and then you can incorporate the shares into tokens. In the future, we truly believe that even the commercial registry will offer that. They will actually offer the possibility for the companies to manage the capital onto a blockchain and to have all the governance tools as well as the corporate actions possible from, that's exactly what we've built, like interfaces for companies to have a cockpit of management of the company to pilot actually the way you need the company to be, to actually make general meetings, the annual general meetings where the the board meets the shareholders and presents the numbers, presents the report, present the vision of the future, and also have people to vote, because this is important. When you're a shareholder, you have rights attached to it, the social rights of voting. And that's why we came up with also this framework of having a wallet. The idea of having a wallet, yet another wallet, yes, but the idea was also to incorporate into this wallet some features of the securities world, such as the voting, such as participating to a general meeting, such as having all the corporate actions being readable in a human way, and not being geeky to use and having like a restrictions of transferability that pops up in the form of error 2020 something, etc. So this is really for us the way forward and where we believe things are going forward. But that's again for shares of a company, and this is straightforward. But at the end of the day, as I said at the beginning, every banking asset, every financial asset or contracts, and it can be modeled in the form of smart contracts. You can automate parts of this contract. You can have its life cycle to be managed in a compliant way and to have actually reduction of operational costs for the issuer. And now if people also agree on the modelization of certain assets, it can really become a game changer for the financial industry, because now they can have a kind of shared back office where they can mutualize the costs. And we believe this is really the best way for the Swiss financial ecosystem to get to the next step, to reinvent itself.
Okay, wow, thank you so much. I'm looking forward to hearing more about that as well.
If I may comment on that one, I think what Arnaud, one of the important points there is that you are essentially, when you tokenize, you don't create something new, it's just data at the end of the day, but you can mold anything into a programmable entity that can bring you enforced compliance directly embedded in the asset. And you can have other rules, contractualize things, etc. You can smart contract virtually anything. The other question will be whether you should, because there are some things you may not want to do it. But ultimately, that will bring, as Arnaud mentioned, regulation directly in the asset, which is a very new concept. And could, if you tokenize the Swiss franc, and there is a new paper from the ETH on the e-franc with a dual payment layer and underlying base layer with a blockchain, you can, with a programmable franc, you can build a sort of a currency that is inherently AML resistant. So all that talk about crypto and digital assets being prone to increased AML risks will essentially go away, because you build AML compliance in a way which makes it even better and more secure towards, from that perspective, than that normal transactions and normal bank-to-bank payments.
Great, thank you for that clarification. Jean-Marc, tell us, there is a big statement on your website that says that real estate is the best investment you can make. We're here in the crypto space, and we've all been through some of the big uptrends of Bitcoin and other digital assets. So please tell us why is this the best investment you can make?
Well, it's a bold statement, I agree, and yet I profoundly believe in it. And by real estate, I really meant residential real estate, specifically multi-residential real estate. Keep in mind, though, that real estate is a very highly localized business, and I come from the US and Canada, I'm Canadian. So when that statement was made, it was geared towards US real estate. If you look at it historically, you take any 10 years, multi-residential real estate outperformed stocks, outperformed bonds, outperformed any other asset class. Not only do you have the yield, which is always very interesting, you have the capital gains over the period of 10 years, and it's not neglectable at all. When you enter real estate, it's usually a long-term investment, and over 10 years, the capital appreciation is very interesting. And in addition to that, you have all the advantages that comes with owning real estate, such as depreciation, which can become a tax advantage. There's always a special program that allows you to defer your taxes or to have more liquidity in some way. So I do believe that the asset class of multi-residential real estate is one of the better ones. Now, I come from crypto as well. I was there in 2012, remember? So I went through the whole thing. I was a miner. We were miners. We did point of sales. We did a lot of things, the embassies. And I do believe that this new asset class of cryptocurrencies and of tokens, even though tokens are nothing new in the sense that they just digitalize what exists, it creates some added advantages that will develop into an evolution of the old classes. Well, as much as I believe that this is fantastic and great and phenomenal, I do believe that the asset, that the real estate tokenized is even more phenomenal, because it will have the intrinsic value of the asset and of the liquidity and features provided by the tokenization, mostly through the DApps and the DeFi that's coming. Uniswap was mentioned by John. There are many others to come. And with the controls that we can have through Mon Pèlerin's application, seriously, I think that the future is nearly here. All the pieces are together, and we're at the beginning of an evolution that will be very quick.
Okay, thank you.
Look at what's going on today.
For that. I think a big piece of that puzzle are actually NFTs, and something it's rarely touched upon. But maybe John, you can give us some insight into NFTs, non-fungible tokens, for those that aren't aware of what they are, special type of tokens which represent something unique. So maybe tell us, John, why are these tokens so special in the context of tokenization?
Yeah, sure. I'd love to. I just want to make one comment first on something Arno also said, where he talked about tokens being a wrapper, but we haven't talked about tokens that are actually natively valuable in some way. So for example, the first one that comes to my mind is Ether, for example, which is valuable because it's a resource where you can use so that you can execute smart contract instructions. So these are digitally native, so we don't really have that issue of wrapping real world things in that sense. And so it's very closer to this idea of DeFi. I just wanted to throw that one out there. Okay. Yeah, it's really interesting because you know, we initially thought that a lot of what we did would be helping institutions to understand what this blockchain thing is and what tokenization is. But what we're hearing a lot in the past half year is a lot of questions around what is DeFi, what's going on there, and what is this thing NFT, what is that? And so it's really interesting that that's what's piquing interest right now. NFTs it's non-fungible tokens. So what it means is if I have a dollar bill, you're indifferent between which dollar bill I give you, right? So those two things are fungible. It doesn't matter which one you get because they both have the same value in your eyes. But if I would have, for example, two different stamps, and one is a very valuable stamp and the other's not, even though they have the same value as a stamp, there's definitely a preference for one because there's something special about it. It's unique. And that's what non-fungible tokens are. They're unique tokens. So each one is the same. Each one is different. And they're used in many different ways right now. The art scene is seeing a big upswing right now in tokenized art. So the fact that you might own the right to something through a token, through an NFT, and you're able to trade that. This is all that you can use a token to verify authenticity of something. These are all new use cases, new ways to use the blockchain in ways that we haven't really thought about before because we're so used to thinking about, I'm transferring Bitcoin from A to B, but it doesn't matter which Bitcoin I give you because they're fungible. So this idea of having differentiable tokens, NFTs, is really interesting. And I think it's piquing a lot of interest from people in terms of collectibles and other things. Yeah.
Okay.
I've had a lot of I've had a lot of questions regarding NFTs recently, mostly in the art scene, like you said, John, and mostly in digital art that lives on the just digitally on your screen, basically.
Yeah.
And I'm not sure how that works.
Well, one thing that's interesting there is that for some reason, there's something really interesting going on in human psychology. And when it comes to this idea of something is scarce, something is limited, that's triggering something in human psychology. And people want to say, I'm the owner of it. So it's one thing to also say, I'm the owner of it and I can prove it. But it's another thing to say, if I choose to sell it, I have a right to that cash flow. And those two things together, I think, are what's firing up this art scene in NFTs.
Okay, thank you.
Wonderful, thanks so much for
You
that,
still
John.
have to keep in mind the legal aspects of that, because tokenizing real estate, it's all well and good, but you still have someone physically in possession of the art. So selling the token and transferring that works for as long as you can trust the one who physically holds the asset. And that's for me one of the practical challenges of tokenization.
Yeah,
at least for things like art.
That's true of physical art, yes. But what we're talking about now is digital art. And that gets back to the idea of I mean, how does this work? Because if it's digital, I can surely copy it. That's true. But we're talking about really having the right to own it and the right to transfer it. And that's wrapped up in this idea of an NFT token. And it kind of goes really well with this idea of digital scarcity, which is kind of the big idea behind what tokens actually are, right? We never figured that out until we had the blockchain.
And I would like also to add that, you know, in the NFT world, the CryptoKitties, they were an interesting use case. I mean, they were, you could breed them to create new, and when you have like some scarce father and mother, you can breed a new one that would be, you know, somehow even more valuable, etc. And this can be, you know, this whole CryptoKitties world can be even applied to other real world use cases, such as, you know, take the example of horses, you know, the entire horse industry, you know, if you can put a horse in the form of a token that has attributes, and then you can have all the parents, the grandparents, and all the generation to be linked together, because now you have, like, obviously you need, as Fedor said, you need some central point of trust that will certify the fact that this horse is actually in line with all the attributes that were put on chain, etc. But it creates also a way to have now a market for people to actually buy and sell and have the ownership of those horses, and have like provable oracles to track all the performance and all the you know, the winning races, etc., etc. So there are a lot of new concepts that can be applied to this NFT from the real world as well.
Hmm.
Yeah, it's there's an actually a very interesting new development right now. The lending platform Aave, they have released something called Avagoches, which kind of is a take on Tamagotchis, right? So these are small NFTs that actually have a yield-bearing asset embedded inside of them. So they're appealing to the collector side and they're appealing to the financial side of people. So that's you know, really, really interesting new hybrid types of vehicles, even if it's like a mini vehicle that we're seeing come to life because of blockchain technology. And we couldn't have even dreamed that something like this was possible in the traditional world.
Wow. Okay, and maybe just adding onto that, I know you're speaking about the tokenization of horses. And this is a question to all of you. Is there a limitation of tokenization where we reach an ethical boundary, right? I mean, if you're tokenizing horses and then you're breeding them, and then it's more looked at in terms of data and numbers, is there a limit to what we can do with the digitalization of the world? Is there a certain barrier where we'll be like, okay, well, we should not digitalize this specific asset or entity?
Well, for me, pretty much everything can be tokenized. As Fedor said, the question is not if, but if it's a good idea or if it's actually valuable to do it. In some cases it is, in some cases it is not. But we truly believe that for the financial world, in this case, this is actually a game changer. And you can really have a way to have a new decentralized capital markets where you can have on the same network the institutions, the fintechs, the SMEs, as well as the average Joe, the retail, and every rule is embedded into the token itself, meaning that if an asset can be distributed by law, it can be only distributable to a certain geographical area, only for Europeans, or maybe to the entire world, but excluding some country, or maybe your asset bears some very complex structure and is risky, and therefore it's under MiFID rules. You have to make sure that each and every owners of that token or have the correct risk profile, the risk averse, risk taker, or the financial savvy enough. All that, can be really coded into it. And that actually is really going to reduce the operational cost of managing it and having less intermediaries and having basically all those intermediaries to be brought down into the network layer, to have those intermediaries to become just a commodity that everybody uses. They are not intermediaries anymore. They are smart contracts that actually act as they should because it's pre-programmed. And if you think of exchanges, as Fedor said, it's something that in the future will become a network commodity. Today we need this external point of trust because on one side I will deposit my security, on the other side you will deposit the cash, we will be able to trade, then there is a settlement and we can get back ownership. But this is something that in the future will be a feature of the network, simply because on the network you will have a shared order book where everybody can put orders, limit orders, and you can grant some allowance to such a network, saying like, I allow this network to actually take into my wallet up to 1,000, 10,000, whatever. You place your orders. When there is a match, it's a peer-to-peer swap. We truly believe that this is the future of the decentralization and having all those external bodies to be commoditized into the network layer itself.
And I'd like to even bring it further than what Arnaud said. He mentioned all these intermediaries that would basically have a lower role because they'll be part of the smart contract. Same is true with respect of regulations. Anything unethical. Well, what's ethical is what's legal normally. All the legalities will be embedded in the smart contracts, which means that some operations that we can do, that can be done illegally today through some stock manipulations and all this, and where the law enforcement comes after the fact, chances are that within a near mid-future, those would be impossible because they would be prevented from being done by the smart contract itself. So also there, you would have more ethics actually on the markets. They would be more trustable because all of the smart contracts would have to be audited, verified for certain rules, and there would be a big criminality element that would be prevented from happening. That's how I see it.
Yeah, I'm not sure about that. I mean, what I think is, I mean, this is a technology. It's a social technology, and it's a tool. And we as a society, we choose to use certain tools or not, and we choose how to use them. And that kind of determines, what's ethical, and legality and ethical yeah. does not always overlap perfectly. I think that in terms of hard coding laws inside of smart contracts, sure, you can do that, but this kind of interaction on the blockchain will be purely an opt-in type of activity, because there will always be those, because laws in general represent a friction and a cost. Right? This is always the case. It's some kind of constraint. So you can have this, and these will be opt-in things, but there will always be a version of it where this is forked out because it's more efficient, it's cheaper, it's faster, etc. That's how I see that playing out. It'll be, you choose to opt into compliance.
Okay, thank you so much for that.
Hopefully everyone will choose to opt into compliance. But I think the other questions that this raises is the question of transparency versus privacy, who controls the data. And I don't have the answers. I mean, there are proponents who say it should be private, fully private. That's fine. And I think there is merit in having the user, the data subject, being in control of his own data. And that can reverse a number of business models and you know, revert to more ethical things like mining data on social networks, etc. But on the other hand, it's in the interest of everybody and globally of the system that illegal behaviors be weeded out. And I would disagree that an opt-in system is the only way to go. I think the best way would be to have a consensus on the standards and to push those standards as mainstream. And obviously there will be on the fringe people that disagree, and they will have, you know, the freedom to use something else. But the mainstream should be secure. And I think the sole reason why it will not be moving as fast as one can expect is it has a cost. Who will spend money developing a regulatory system that will be, as John mentioned, be perceived as a business killer? So either regulators will come up to speed, and there will be a huge educational effort before that happens, and they will spend money on bringing certain minimum standards, saying this is how you can transact, you know, securities, that tokenized securities, and this is the minimum things you need to implement. And then you have regulated markets. Yeah, and otherwise you will have chaos.
Thank you so much for that, Fedor. And as we're reaching the end now, or we've passed the end even, and there's a few questions here as well. I think we won't have time to answer all of them, but since we have the tokenization and the future of finance as our core topic here, maybe we can close off this session by each of you just giving your perspective on the future here in very short, so that we can close off this session without keeping people too long. So maybe Jean-Marc, if you'd like to start.
Well, I think I gave a few pointers as to how I see the immediate future. I think that we're seeing a real boom in DeFi, and that's not about to go away. It's not a trend. It's a profound change. Governance tokens and the way that we will have more transparency through asset tokenizations and through smart contracts will make, I believe, legals. Yes, it's a challenge, yes, it's a cost, but I do believe, like Arnaud said, that in the near future, it will make a reduction of costs and more easier to be liquid and exchangeable if it's within the right frame, of course. And I do believe that it won't be opt-in. It will be necessary. There will be always this element, but if you want to have the security of knowing that you own something really, it will be, there will be a standard somehow with the legals built in.
Thank you. John, would you like to continue on that note?
Sure, I'm definitely very bullish on the future for tokenization and blockchain. Of course, a lot of that relies on scalability. How do we get this social technology to scale up to where the world can actually use it? You know, the world is becoming digital. Everything's becoming digital. All this infrastructure is reaching into areas of the world that traditionally have been left behind. So all this onboarding is going to happen through smartphones and this type of infrastructure. I think the idea of sovereignty is going to hit home very soon. People are going to, I mean, I see this in this idea of NFTs, that people, they want to own it. They want to have it themselves. They don't want to have it in an account that someone is taking care of, custody. They want to have it on their phone, know that they're in control of it. And I think that will kind of spill over into traditional assets also. This idea that, hey, you know, it's on my phone. This is really mine. I'm in control because I own it. I can transfer it. That's super compelling. And I think it won't be long before that starts to become mainstream.
Okay, thank you. Arnaud, please, your closing words.
Yeah, like John, I'm super bullish on the fact that in the future we will see more and more usage of tokenization. As Fedor said, it will require standardization. It will require people to use the same standard. That's why I believe the work of CMTA is crucial to produce those blueprints where then the tech framework can be different, or anyone can come with its own interpretation and implementation, but at least to follow the same principles and guidelines. Obviously, in the future, we will have a tendency to see that some institutions will adopt some standard more than another, simply because they will need to have the proper interoperability with the way they work internally with this and that. And it will become just a commodity. That's why we believe that this entire tech world is open source, is here to be used by anyone, it's not that important, right? So the tech part is definitely not that important. The importance here is really to help companies to embrace this new world, to bring new interfaces that makes it easy to understand, easy to use it on a daily basis, that is not too geeky, too complex to use. I mean, just as a quick example here, today there was the so-called distribution of Uni token from Uniswap. It's crazy because I received probably 20 phone calls from friends who actually used Uniswap in the past, but wanted to claim their tokens and they were not sure how do they do. It was not working from their wallet, and they had to sign transaction from MetaMask and import the seed that they had in another wallet into MetaMask to do it. And the whole scene here is quite geeky to use. It's quite complex. So we need to bring this simplification. We need to, when you move a token, you need to have Ether to pay the gas. So we need to embed that. When you want to do a tokenized Swiss franc, you should pay the gas fee in the form of Swiss franc. Yeah, you send 10 francs, and maybe 5 cents will be taken. 5 cents will be taken from, and the recipient will receive only 9.95. So that you don't even need to know that there is Ethers paid on the back. It's using gas stations or whatever. So these are the next steps for the general adoption, to have proper wallets that looks more like an e-banking than a geeky wallet with signing transaction and that this and that.
Yeah, thank you. And that actually answered Daniel's question that he had about the Uni token. Maybe Fedor, I think you had some closing words, and maybe there was a question that you wanted to answer in particular.
Yeah, I think in terms of closing words, I will not repeat everything that has been said, but I think the key part is infrastructure. And for most parts of the infrastructure, it's already here. It's already here in material parts. The last bit, which are the regulated exchanges, there are already a couple ready. Like Swissquote has one. Well, Daura has one that is functioning within their own closed loop system, which for me, it sort of defeats the purpose in a bit, because I'm more of a proponent of an open source nature and open banking, etc. SDX has a project. Others have announced projects. So it's getting there. Although I think last year I predicted that by the end of 2019 the infrastructure would be there. Well, then COVID came and we're set back by 1 year. But I think end of this year, early next year, we'll have functioning exchanges with tokenized securities, which will create an incentive for issuers to actually use that. And the more it will be used, the easier it will become, and the cheaper it will become. And so I think it may be in 2, 3 years, 4 years from now, no one will be talking about blockchain or something. It will be taken for granted. Like, no one actually talks about the technicalities of how their car is running. You don't care, it just runs. I mean, you can drive it, you sit there and that's it. That will be the same probably for issuers. Now, people will have, blueprints, you plug and play, you issue your things, and that's it. And that's where it will be, will have reached the peak of adoption. I think another challenge, it's more global, is digital identity and ownership of data. Because from my perspective, this whole thing will drive a change of paradigm in terms of ownership of data, which should become more user-centric, in the sense that it's not the data processor that collects data and sits on a huge data lake, but each user is a sovereign entity, or maybe multiple digital identities for each user, and can lend that data. When we switch to that model, the networking effect can be huge. and it will be a different methodology. But we're not there yet, so there are things to evolve. And perhaps I think I answered a couple of questions already on the exchange things. So Swiss Code has already one. It has been tested. The test run which we did with CMTA and a couple of banks actually had us as CMTA issuing tokenized shares from our company CMTA Labs.
Nice.
This was purchased by banks that then traded them among themselves using the Swiss Code trading platform, and then the shares were retransferred back to the issuer. So there is a real life example that has been reviewed by auditors as well, and you can go to the CMTA website. There is a link. You can review the blockchain data, etc. So it essentially works. And so next is just to have a functioning market, you need issuers. So I mean, issuers were waiting for a market, and the market was waiting for the issuers.
A little bit of a chicken and the egg problem, right?
Yeah, and the answer is Amazon was before. You can order both on Amazon. But no, the bottom line for me is that the programmable asset and embedded compliance, coupled together with self-sovereignty and ownership of own data, which can come in hand with privacy as well, would be the driver to my mind, although obviously governments will probably see differently.
Well, thank you so much for that. I think we haven't been very Swiss within the panel, as we're 13 minutes over time, but it was very entertaining, and time flies when you're having fun, right? So thank you all for joining today. We will put a recap of this session online on our social media channels as well. We hope that everybody enjoyed this session, I think, as much as our panelists did. And yeah, thank you all for joining once again, and we hope to see you soon.
Thank you very much. Thank you, Shiraz. Thank you, everybody.
Thank you, Shiraz. Thank you all.
Thank you.